A seismic shift is underway in industrials, driven by surging orders, with a key rate decision looming. This is what every serious investor needs to know about industrials right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we enter the week of June 8 to June 12, 2026, the overall market context is one of normal conditions, with the VIX at 19.6, indicating a relatively stable environment. Within this context, the industrials sector is holding its own, slightly outpacing the broader S&P 500 this week. The sector ETF, XLI, has posted a gain of 0.61%, a modest but notable move. Given the current economic landscape, industrials deserves attention right now, as it is a key barometer of the overall health of the economy, and its performance can have significant implications for investors. As we delve into the industrials sector, we will examine the underlying trends and drivers that are shaping its trajectory. This educational content is not financial advice, but rather an in-depth analysis of the sector's dynamics. Let us start with the technical picture and what the charts are telling us. The industrial sector, as represented by the ETF XLI, has shown a weekly change of 0.61% and a monthly change of -1.52%, indicating a recent rebound in momentum. The RSI reading of 45 implies that the sector is not currently overbought, and in fact, is still in a relatively neutral territory, which could suggest further upside potential. This RSI reading, combined with the bullish signal, indicates a positive trend direction and growing conviction among investors. Key support levels likely exist around the recent lows, where the sector has shown a tendency to consolidate and regain strength. On the other hand, resistance levels are likely to be found around the recent highs, where the sector has previously struggled to break out. The current move appears to be a sustainable breakout, rather than an extended overreach, as the sector is still in the process of consolidating and building momentum. A specific technical setup worth watching this week is the potential for a further breakout above the current resistance levels, which could confirm the bullish trend and lead to additional gains. Now let us look at the fundamental catalysts driving this sector. The industrial sector is set to be influenced by general macro conditions this week, as the market regime remains under normal conditions, with the VIX at 19.6. From a macro perspective, the current economic environment presents a mixed bag of tailwinds and headwinds for industrials. On the positive side, a relatively stable interest rate environment and ongoing infrastructure spending are likely to support the sector. Conversely, potential slowdowns in global trade and manufacturing activity could pose challenges. Key stocks such as CAT, HON, UPS, BA, and GE are signaling a moderate level of sector health, with their recent performance reflecting the nuanced macro backdrop. This week, investors should keep an eye on any earnings reports or regulatory news that could impact the sector, as well as macro data releases that may influence the overall economic outlook. The longer-term fundamental thesis for the industrials sector remains intact, driven by trends such as increased defense spending and the ongoing need for logistics and machinery upgrades. As we consider positioning in this space, it is essential to remember that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. In the industrial sector this week, investors are facing several key risks, primarily centered around global economic uncertainty, supply chain disruptions, and potential labor unrest. As we navigate this environment, with the VIX at 19.6, it is crucial to carefully consider position sizing to mitigate potential losses. Unexpected headwinds, such as geopolitical tensions or unexpected regulatory changes, could further exacerbate volatility. A disciplined framework for managing downside exposure involves setting clear stop-loss levels, maintaining a diversified portfolio, and continuously monitoring market conditions. By adopting a proactive approach to risk management, investors can better shield their portfolios from adverse events. This approach requires ongoing vigilance and a willingness to adjust strategies as market dynamics evolve. Please remember, this is educational content and not financial advice. It is essential to conduct your own research. And now for the strategic outlook. Where does industrials stand heading into next week? This week we remain cautiously optimistic on industrials, driven by a rebound in manufacturing activity, with a key theme being infrastructure spending. Investors should track this theme closely, as it may drive sector growth. Please remember, this is educational content and not financial advice. If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your industrials watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.